Wealth is not measured in digits. It's measured in hard assets. It's measured in the stuff you've acquired that has value to not only to you, but in the world. So you should always be looking in terms of how can I deploy my capital in such a way that I get more hard assets, which is real wealth. Because real wealth is assets that have value, that have no counterparty risk. That's my definition of wealth, right? So if they've got marketable value and they have no counterparty risk, meaning you own them and no one else owns them, or if you do know what the counterparty risk is, you can quantify it and it's very low relative to the value of the asset. For example, if you own your house, where you're still paying property taxes, your counterparty risk is that you have to pay your taxes every year. And your taxes are some amount. If your house is worth, $300,000 and you're paying $1,500 a year in taxes because you live in the right county in Florida and not the wrong county in Florida, supposed to be paying $6,000 in taxes. Well, then you have less counterparty risk there because at that level, you don't have to worry about all you have to do is come up with a measly $1,500 to continue to press this claim of property that you have. I want you to ask yourself how many layers of counterparty risk you have between you and your stock portfolio or your bond portfolio. What's your counterparty risk for gold? I don't know. Your dog food bill? Right. Your dog food bill, right? Or, whether or not you've cleaned your guns recently. Like that's it. The counterparty risk is you. You have control over that. You get to decide what your risk is. You get to decide how much risk you're willing to take. So there's savings, there's investments, and there's defense. Think in those three: gold, goats, and guns, by the way. Savings, industry, defense, gold, goats, guns, right? So when you think of it in those terms, that's how you structure a portfolio. What you buy to express those three things, that's up to you. Okay. What I can do is tell you what I think, what asset classes are going to fit best over the course of the next few years into those three buckets. And then you decide what you're going to do from there. And if you're like me and you don't like counterparty risk, or more appropriately, if you're like me and you don't trust yourself to make good decisions when you have counterparty risk, and I've said this many times, then you just buy hard assets and you bury them in the ground. Because I don't like myself and I don't like the way I interpret the world when I am invested in that part of the world. I lose my objectivity, what little objectivity I can actually claim to have. I lose that the minute I've got financial assets on the table, because now all of a sudden I'm like, shit, do I get rid of that? I can't do it. So I've learned myself the hard way by losing money a lot in the past that that's just not the right way I should go about living my life. And certainly not, you can even say that now during this time period where counterparty risk is unquantifiable and unknowable because there's so many layers of it between you and your actual money. And then you're hoping that the people who are quote unquote managing your money, or who have actual control over the disposition of those assets that they say that you both have contractually agreed that you have, that relationship is only as good as the contract and the institutions that enforce that contract. So you have to be very careful about this. And with that number of layers, this is an easy way of saying, take on only the risk that you're willing to take. And after that, you buy assets that make you happy, that give you value and give you joy, de-risk your future as best as possible. And that means you're buying assets that the rest of the world hates. That's simple. And you're also buying hard assets that, in the case of Bitcoin, that the people you hate need. Gold, Bitcoin, oil. So they need these assets to enact their control. So why wouldn't you own those assets? And do you think that they're going to allow those assets to rise in price so that they can go grab them, so that they have to pay the highest price for them? No. Go look at what colonialists have always done. What have I said earlier? France likes to buy uranium from Niger at 0.1 cents on the dollar. But at some point, when Niger says, nope, 10 cents, bull market in uranium on all four.
They were talking about how much dormant cash was sitting in bank accounts, right? And they're making plans of how can we get that out. So to your point, it's there. There's going to be these things. I mean, what do you think the lengths they'll go to because it's a debt-based system, right? So they're trying everything they can to pull this cash out of accounts, out of anything, just to get it moving. What are the depths of which you think they will end up going?
It's not going to happen in the United States. I'm going to tell you this right now. Everybody who's saying that they're going to do it in the United States are crazy, unless, of course, they install Kamala Harris and then dare us all to get rid of her. And then what will happen then is that all the red states will split, the bond markets will collapse, all this other shit will happen. And that's their gambit. That's actually the real blackmail, folks. It's not World War III. Europe, they're already talking about this. You know, we have Frederick Merz, the head of the Christian Democratic Union, nominally the German Republicans, saying, well, there's these $2.8 trillion just sitting in bank accounts that we need to mobilize or get our hands on. I'm like, yeah, you can say that because you took everybody's guns. Can't do that in the United States. It ain't happen. They're going to try it in Europe because, you know, they've never had private property rights in Europe anyway. Like, so why wouldn't they? But they're not going to try it. They're not going to try it here. They will continue to try and like play around the edges, and they will, you know, they always trial balloon this shit. Unrealized capital gains tax harmonization through OECD rules for corporate rates. Basel III is another one of these potentials. We have to become more sophisticated at the techniques that they're putting in front of us so that we can just choose to disbelieve, stay on, you know, don't doom scroll our Twitter feed, and then go build something brilliant with our off time. And, you know, the goal for people like myself and others is to condense all that into a methodology and a way of seeing the world to then educate and present. And then you take from it what you think is valuable and chuck the stuff that you think is stupid or, you know, whatever, and then and then go about your life. And hopefully I'm going to sit here and make some sense to you to help you demystify these things so that you can get a portion of your life back. Because remember, there's taxing 75% of your fucking income. You only got 25% of your time, your productive time actually comes back that you get to live your life with, right? 65 to 75%, depending on what country you live in. And they believe that they should get 95%. That's the sad part about it. And like that time is really precious. And so, you know, I would have never thought that, I'll be honest with you, Brandon, I would have never thought that, you know, I would be doing this to the size audiences that I do with the, you know, even the meager amounts of influence that I have. And the reason for that is I'm like, people shouldn't be doing this. They should be out there building like bridges and shit. They should be doing like making real things. They shouldn't be listening to some, you know, professional asshole like me, like screaming into a microphone. It just seems dumb, but okay. If you like it, great.
What are your thoughts, if any, on like the grand chessboard? I have yet to read the book, but just like the island of the geopolitical nature, obviously, of, you know, just the Belt and Road, what's going on there, the old Silk Road, just, and how those continents obviously can really do what they need to do. And then we're off just in this island over here. Do you have any brief thoughts on that at all? And just, if you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.